Hello and welcome to the big picture. The monetary policy of the third quarter of this financial year, announced today by RBI Governor D. Subbarao, has brought in some cheers to the middle class suffering from high food inflation as its home and vehicle loan installments may come down. However, how the RBI's decision to cut the short-term lending rates by 0.25% and the cash reserves ratio for scheduled banks by similar margin will help the economy and the macroeconomic situation is a debatable issue. Though the cut in rates was expected in some quarters, the uncertainty over it had created some anxieties. The lowering of the rates are expected to boost growth, though the RBI's GDP estimate for this year has been brought down from 5.8 to 5.5%. Will this decision of the RBI lead to the expected growth in investments and generally kickstart the sagging economy? What will be the impact of it on inflationary pressures, which according to the RBI has peaked? We will discuss all these issues today with my guests here, Dr. Sowmya Ghosh, Director Economic Cell, FICCI, and Soma Banerjee, National Policy Editor at the Economic Times. Welcome to both of you. Sowmya, you think this is a policy which will create the appropriate environment for re-kickstarting the growth?
Yes,
this is what the RBI governor expects.
Yeah, I think it's a policy. The 25 basis point cut was factored in, and it's a positive intent on the part of the Reserve Bank of India to look at lowering the rates, and it is welcome by all the industry and also the market. And I think it should give some cheers to the market and also some impetus in terms of a good growth inflation trade-off going forward.
Okay, but what about it is assumed that the inflation risks at this time are moderate. Do you think that assumption is the right assumption?
See, if I look at the inflation numbers, I believe that the inflation rates have been tapering off. For example, if you look at the core inflation rate at 4.2% in December, that's a 36-month low. If I look at the WPI numbers, that was 7.18%, that is also a historic low. The only problem is with the retail inflation, but I believe retail inflation, which is at 10.6%, but even in retail inflation, if you look at the core retail inflation, which is excluding the food and the fuel, that is around 8.4%. So I think the problem only is on the retail part, but I believe that the retail part is also driven by some structural issues like the supply side bottlenecks, which keeps, and given the preponderance of the food items in the retail, that tends to keep it at a higher level as compared to a WPI.
Okay, we are now joined in by Professor Ravi Srivastava, economist and professor at the Center for the Study of Regional Development at the JNU. Welcome to you, Professor Srivastava. Professor Srivastava, this issue, when these kind of policies are discussed, when these policies are announced, people always try to look at the positives. What are the biggest problem now faced by people in this country, the ordinary people, is the food inflation. Food and fuel inflation. These are two inflations, and keeping aside those two things, you look at the rosy picture. I mean, is it the way it should be done?
Well, I think as far as inflation is concerned, I don't think inflation is only due to monetary policy. There are a number of elements, a number of causes. By and large, it is cost push inflation, right? In my view. So I think the RBI stance, in fact, probably has been too rigid and for too long.
So you welcome this?
Yes, I would welcome this stance. Okay. Yes.
Yeah, you're talking about the inflation itself.
I think yes, inflation has to be dealt with on a number of fronts, and I think supply related policies to ease supply, to increase to ease shortages as far as food grains is concerned, bottlenecks is a very important issue. But of course, some part of the inflation push, the cost push, is again coming from international sources, and we cannot insulate ourselves fully from that. So I think one has to understand that both the causes of our stagnation or slow growth just now, as well as inflation, there are mixed causes, and one single policy cannot deal with any of this.
Okay.
So RBI is correct I think probably RBI held back too long in some sense.
So would you say that today's decisions are aimed at growth, and at the cost of inflation? Would you say that?
As was being said just now, But I don't think it's aimed at growth at the cost of inflation. RBI also has some elbow room at the present moment. RBI has followed, in my view, a sort of fairly strict inflation targeting, which was not in some sense necessary. I think it was necessary also to focus on growth and then to follow a whole range of policies to insulate the common man from inflation and to lower the rate of inflation. So at this juncture, actually giving a boost to growth was very necessary. So what RBI has done is obviously correct, but perhaps one may argue that it is still perhaps a little bit on the conservative side.
Not enough?
Yeah, not enough.
Soma, growth versus inflation. This debate always continues, and from what Professor Srivastava is saying, that he is on the side where it says that you focus on growth, the inflation will take care of itself. Would you subscribe to that?
I don't know how much I can really agree with that, because like he very rightly pointed out, that there are structural issues. So the RBI can do this much as far as growth is concerned. But if there are structural issues, then how does inflation take care of itself? I mean, there needs to be certain steps needed to be taken for supply side management, which has not taken place, which we have not seen happening. Now, it's right that it has been far too long and growth has been suffering. There was a very big need for rates to be cut, which has come, and I agree completely that it's perhaps a little late. But at the same time, I don't think inflation is something which we can put aside. And like rightly mentioned by the earlier speaker, that it is basically your core inflation. So it is food and fuel. And as far as the common person is concerned, his budgets for his food as well as fuel is only going to be increasing with the days. And the other factor of international money coming into the market. So, it is still, the verdict I think is still not out there. It's still too early. Yes, it was indeed important for growth. This cut was indeed, but I don't know how much it can really do about growth also, because half of 25 basis points on both sides would really not be such a big booster. Yes, it's a great sentiment booster.
18,000 crores is going to be in the market, liquidity, extra liquidity in the market. How far can that 18,000 crores take this economy? Professor Srivastava?
See, the question just now is on the growth front. Basically, the issue is that private investment has slowed down,
right,
from 25%, 21, 22%. And private investment, it's both. It's expectations, the kind of capacities which were built up earlier, and then interest rate, the cost of financing. But the cost of financing is not only the internal interest rate. It has to do with the cost of international financing. Basically, there was easy financing in the period 2002 to 7, which is not available now. Interest rate alone will not be able to even deliver on as far in the small interest rate declines which we are expecting is not going to be able to deliver completely on even on the cost of financing part. But I think expectations is playing a major role. The kind of capacity built up we had during 2002, 2007 is playing a major role, which is why manufacturing output has decelerated. So you have to look at a whole gamut of factors. As was being pointed out, both growth and inflation, you have to act on a whole range of policy front just now in a very difficult international environment.
Okay, Sowmya, the issue of what Soma is talking about, structural issues need to be tackled. Where are the problems there?
See, I mean, structural issues, for example, I was talking about those retail inflation numbers, and it has been, the RBI has been saying that the retail inflation is consistently at more than 10%, so it's difficult to cut the rates. While appreciating the RBI viewpoint, let me add one point over there. We at FICCI had done a study some time back saying that how do these intermediaries in between push up the prices at the retail level. For example, and we found out that if an onion costs ₹100 or 1 unit, the price actually translates into 121 at the retailer's level. And what is pushing up these costs? These mandi costs, these transport charges, these electricity charges. So all these charges are in between. So my point over here is that
these are unavoidable.
These are, some of them could be avoided, and it is precisely these structural issues which some of them could be avoided by the government, and some of them could actually be simplified. And it is because of that reason that why we see that there is a significant divergence between the WPI and the CPI number. An interesting trend over here I want to say is that the RBI talks about an acceptable inflation rate of about 5%. assuming that 5% food inflation or whatever is acceptable inflation rate, the last time the retail inflation was at 5% was in, I think, February 2006. That was 6 years back. So going by that logic, I mean, we will not be in a position ever to cut the rates, because the CPI is not going to decline going forward, given that it is more close to 60% of weightage is in the CPI basket, and because of the structural issues.
Soma, you know, this is an election year. There are going to be elections to 5-6 states. Onion prices are going up. You know, we remember what happened in 1998 when the onion prices shot up and governments were lost. How does the finance ministry take this kind of a decision? Do you think they are enthusiastic about this move of the RBI, or do you think they would have had a better deal from the RBI?
See, I think the finance ministry and the minister per se has been doing very well in managing expectations. This is actually a game of managing expectations as I see it. The structural issues which he mentioned are not going to be solved overnight. Exactly. They are going to remain there. And we're forgetting that, you know, with inclusive growth doing whatever little it is doing, you are seeing huge changes in the food basket of people. People are eating more proteins and you do not have that much supply coming in. So apart from structural issues, I think there is an issue about demand and supply over here too. As far as the finance ministry is concerned, they would like to see growth come back at this point. And this could be the big push which the finance minister would like to show for the industry to say, we've done our bit. Despite inflation being high, despite the RBI governor making it very clear that he's not comfortable about it, and him projecting a slower growth, we have gone ahead and given you this bit which you're mentioning as about 18,000 crore, it would yield to a lower interest rate. But again there, I have my doubts about how much it can really cut. Like the professor mentioned very rightly, there are also international reasons, and there are also situations which are not just about lower interest rates. I mean, higher commodity prices or higher crude oil prices or higher electricity tariffs are a reality which they have to come to face with. Don't forget, all this when demand is really not picking up. So given a choice, I don't know how much this can really do in cutting ice with the industry. And for the common man, okay, your house EMIs and car EMIs could be lower, but going to the market still remains a very dreadful
situation. Yeah. Anyway, at this point, we need to go into a short break now. We'll come back and continue this discussion further. Please keep watching. Welcome back. We are discussing the monetary policy announced by the RBI governor today. Professor Srivastava, Soma was pointing out about a very interesting, looking at the political economy of this in this kind of a situation. Government wants to show that the growth is there, the investments are coming in. At the same time, they have to also control inflation, because inflation is a political issue. It's not just a So how do they balance these two?
No, I think the government has a difficult act to follow. The government has to focus on growth, but at this present juncture, this mainly means stimulating private investment.
Exactly.
In a climate where private investment is really, it has low expectations. And therefore, I mean, it's not just, as I said,
when you talk of private investments, are you talking of domestic investments or foreign investments also?
Well, they are naturally also looking at foreign investment. There's absolutely no doubt, which is why there was a bundle of policies. We have they are both looking at domestic investment and foreign investment. But both foreign investment and domestic investment are stimulated by the same set of factors. So but government has to generate positive expectations about the economy. It has to take the right set of measures, at least in the short run, because in the medium term and long term, it has to do with, focusing on infrastructure and those kind of constraints. At the same time, it has to do whatever is necessary to reduce the inflationary pressure, whatever it can do at its level. And that really has to do with supply management, mostly do with supply management. The issue is that the common man is being hit by food inflation.
Right.
But of course, the WPI we know has a much larger weight to manufacturing, and there we are looking at more cost push factors. Fuel is coming in, other kind of cost push factors.
Food and fuel, these are two issues which hits the common man directly. Absolutely. And all this talk of controlling the inflation, the numbers, all these things make no sense to a common man for whom he goes to the market and he has to pay more for his onions or pay more for the fuel.
Yeah.
So this is where the government, Sowmya, gets caught in situations where the growth versus inflation, the debate again keeps on coming back, right?
Yes. See, I mean, as rightly said right now, I think basically primarily right now the issue is of, I mean, the government wants to revive growth. It has taken a series of steps, and how the RBI can also do its bit by lowering the interest rate, and then that is giving a fillip to the investor sentiment. So I think this 25 basis point cut, which all of us are talking about, this is not going to be a magic wand.
Exactly.
But this is exactly what is going to do, is going to lift the sentiment. And that is most important at this point of time, because we have seen a very positive sentiment from September 2012 when the government started announcing the reforms measures. If you look at the movements in the rupee, if you look at the portfolio inflows, so all these external factors have become a little favorable. But
how far external, when you talk of external factors, Soma, there was this sovereign debt crisis, it had created a global financial crisis. You think the RBI says that it has ebbed. Do you think it has ebbed, and do you think that is that's the right expectation on part of the RBI?
Well, I think we are seeing some moderation. I don't know if you can say ebbed, but we definitely see it better than before. But
so that should help some foreign investments coming in?
Yeah, but before we go to foreign investments and even private investments, I think the big concern which I see today is the fact that your public spending is not going up. I mean, at a time when growth is really stuck, you look at your government companies to really go full hog on their capex. Now, many of these companies are sitting on cash piles, but are not being able to spend it for very silly bureaucratic reasons. I mean, you look at the balance sheets of, say, ONGC, Sea of SAIL, Sea of NTPC, Sea of Coal India. You will find in most of these cases they have projects lined up, but projects have not taken off, or even a BHEL. Now, I think that is where the government really needs to address, because it is going to take some time for the private investments to really come in such kind of a market. And there you could really see growth being given a push. And while we are talking of growth and inflation, I think also very important to understand and I think appreciate that the government has taken some politically very, very risky steps of doing down with subsidies on fuel.
Right.
Now, I know at this point when inflation will tend to rise its head, and we're talking of food and fuel, the big clamor will be to cut back, and allow subsidies to grow, which it can really not be afforded. So it is a reality that you have to pay higher electricity tariff. It is a reality you will pay more for your diesel, particularly in a country which imports more than 90% of its crude at this point. I don't think we have a choice there. So given that you don't have too much of an elbow room there, what you can do is only work on your supply side management through your own companies. So, get the manufacturing sector going.
Professor Srivastava? No, do you agree with her that there has been, it's just these bureaucratic hurdles which has stopped public sector, who they are sitting on this cash pile and they are not investing?
Well, I think there is a whole series of constraints on public sector investment, but she's absolutely right. There are surpluses available, and it should be possible to use them. Because at the moment, only focusing on private investment will really not do the job. So that is absolutely correct. And on the question of subsidies, it's true that, the government has to be selective with subsidies. But at the same, and the difficult choices are there. But, I think one has to, there is a question of how do you address the issue, very complicated issues, for instance, of diesel subsidy.
Right.
Because it goes into freight. I mean, there's a large part of our agricultural economy which is almost entirely dieselized, if you look at Eastern India, for example. So there will be a cost push as far as on agricultural cost as far as all this is concerned. So I think there are very important and complicated issues here, and I don't think that the government always comes up with the right answers, but issues, the focus has to be on management. The focus has to be on using the kind of the surpluses which are available. And also, I think how far the government goes in with the contracting government expenditure, government consumption, at this stage is also an issue. Because I don't think, I know that inflation is there, but if you use the government, government expenditure correctly, I think you can still stimulate the economy.
Do you see the government expenditure going up? Today I was reading somewhere that that the CST which the centre has to give to the, there's been some agreement today or yesterday with the states
amount
about
of compensation
which the centre has to give to the state. That will add to the expenditure of the government. That's not going to reduce the expenditure of the government.
Yeah, but overall there is a huge effort at the moment to prune and reduce expenditure. We know that, the directives have gone out to departments, and there is going to be a cutback in many areas.
I think one area which, if I'm intervening, one area which should see some results, if not immediately, but maybe in the next 3 years, I would say, is the direct benefit transfer, as they call it today, because that is really targeting at subsidies being given to the right people. A large part of the subsidies, as we know today, are not reaching the targeted people, and therefore
so there should be a lot of savings.
I mean, we do see duplication going down. A lot of bogus subsidy claims would go down, and I think a lot of people who don't deserve subsidies should be out of the list. I mean, anyway, LPG subsidies
is a debatable issue, because we don't know how effective this direct benefit transfer will be because of its dependence on Aadhaar scheme, and the Aadhaar itself is not still a legitimate. There is no laws protecting it. Anyway, coming to you, Sowmya, the 18,000 crores extra is going to come into the economy. The scheduled banks will have that kind of money. What do you think they should be doing with that?
I think ideally, they should be they should use a part of the surplus, money which is coming to the system in terms of lending. But right now, as the RBI also have said, if you look through the policy statement carefully, is that RBI also has expressed concern about the asset quality of the banks.
Right.
So that is one concern which is quite legitimate, and in a scenario when the growth has been plummeting, I think it's one of the concerns which the banks also need to address while giving out the loan. So I think overall it's a win-win situation on the part of the banks, and again I emphasize that this 25 basis point rate cut should ideally lead to a lower interest rate situation, provided the banks take the lead and some of the banks actually start reducing the lending rates. So if that was to happen, I think we are going to get the full benefit realization of this move by the Reserve Bank of India.
But saving rates also will go down similarly.
The deposit rates will go down, and I think the banks are mainly going to use it to lower interest rates and basically stimulate housing finance. And consumer finance. How much of this is going to go into investment, I think, is very
And how much of it is going to benefit the common man? You can't be sure about it. If it, the middle class,
loans and
home loans,
consumer loans are definitely going to. But I agree. How much of it is really going into investment, and particularly given the point which he raised on NPAs, I think with big kingfishers sitting on their books or any of those, it is going to be a difficult question for the banks to really see who I could lend to.
Right.
For instance, you have a clutch of power projects which are all set to start working at least on, but they don't have the fuel. So, how do you expect banks to go out, and they have them on their books? So I think it is a very difficult situation for the banks also to take a call on where they can lend the money. A bit of it will go into consumer market, which again could push inflation. Money coming into the hands.
One clarification I want to point over here is the 18,000 crores. Please remember that in September there is advance tax outflow and all those things.
Okay.
So I think this is a very good measure on the part of actually balancing out those outflows which are scheduled in the month of March. So from that point of view, I am not sure how this 18,000, because banks, as you mentioned just now, will be wary of lending at this point of time.
Okay. Professor Srivastava, last words to you. So this decision of today is just about creating better expectations. Is that?
And it would have a marginal, it would have an impact of expectations. It does reduce the cost of lending a little bit. It increases to liquidity. At the moment, I don't think liquidity is a major worry. So it's a move in the right direction, but at the same time,
I think there's also one more thing in this management of expectations. The RBI has been very hawkish that the government is not doing enough as far as the fiscal deficit is concerned or subsidy management. So while putting down the interest rates lower, I think it has signaled that it is happy at the way the government is working towards fiscal deficit management, which I think is very important for all your credit rating agencies who are watching.
And then, so that's a positive note, because so the RBI is sending some positive signals to the government, patting it on its back that you're doing a good job. Please continue. Hopefully, let's see how this will all pan out in the coming weeks and months. Thanks to all my guests, Professor Ravi Srivastava, Sowmya, Kanti, Ghosh, and Banerjee. Please keep watching. We'll come back with another issue in the big picture, same time tomorrow.